Today's Monday, July 22nd, and this is a chart review involving Occidental Petroleum, ticker symbol OXY, and as of Friday's close, the stock ended the week at $63.13 per share. So this is the 7-day 500 tick chart, which means each of these candlesticks represents 500 trades consisting of both the buy side and sell side. The 7-day high was back on July 18th, last Thursday, hitting a price of $64.76. And since hitting this high, price has fallen below two reasonable support and resistance levels. The blue horizontal lines are from a broader time frame. The yellow are a short-term time frame. And just going back a little further, the 7-day low it was right here at $61.06 back on July 15th. So as time moves forward, these levels will eventually start dropping off because it's not fitting inside that 7-day time period. And we can see here that price is at the cusp of coming back down, retesting this lower yellow support level, which is around $62.30. And price was rejected several times heading into the end of last week. So there is a probability that price may come back down, retest this. And possibly heading into the stock market open, I am looking to get into a position on the short side, speculating that price may eventually come back down, retesting that 7-day low, $61. Right down here is that bottom yellow trend line. So if price fails to hold here, then that increases the probability of a potential retest of $61. I do have another support level sitting at $60.34 from a broader time frame. So this is another level I'm looking at if price, if this downtrend continues. So while I'm here, I just want to take a look at what the oil futures is doing. So this is my futures watch list. This ticker right here, /MCL, is oil. It's the micro oil futures. So it's quoted at $78.38. And since the futures market started trading last night at 6 p.m. Eastern, oil is down 26 cents. So this move to the downside may carry over into this stock, considering that it is also an oil play within the oil sector. So for the purpose of time, I'll pause it here, and possibly the next update will be my short entry, or I've already shorted at that point. So more to follow. Today's Sunday, August 4th, and this is a follow-up to the July 22nd chart assessment on Occidental. As of Friday's close, the stock ended the week at $57.67 per share, so a major pullback since the initial review. So this is the chart layout at the daily time frame. Each of these candlesticks represents a day's worth of trading. This red candlestick is for August 2nd. And the red vertical dash lines are system-generated markers for expiration Friday for monthly option contracts. And the most recent expiration was back on July 19th, and the upcoming expiration is August 16th. And since I did this review on this candlestick right here, heading into the stock market open, even after the stock market started trading that day, I did take a bearish position. I didn't short the actual common shares. I shorted via option contracts. So what I did was, so this line is just a visual markup as to where I took the short entry. And my option contracts is specific to the expiration date for September 20th. And I had selected the $60 strike price. And as a buyer of option contracts and bearish, I'm on the put side. When I entered this trade, OXY was quoted at $62.48. So at the point of entry, it was $2 higher than the strike price I selected. So essentially what this contract is saying is that on or before the close of September 20th trading session, I was speculating or anticipating that OXY will be at or below $60. And based on Friday's closing price, it's way below my $60 target. So the trade is clearly going in my direction. And we can see here that heading into Friday's close, price did come down to test the $56.52 support level. We can see that there was a bounce or a rally heading into the market close. So, and that created this wick. So there was a lot of buying at this $56 price level. So it's possible heading into this week, price may curl back up and retest the resistance level of $60.34. So again, what was once acting as support could now be acting as resistance. So we could, if price does come up here, it's possible that price could get rejected and come back down to 56.52. So because I took this position before this significant drop, and also this drop is attributed to the S&P 500 selling off the past 3 days. So this candlestick here from August 1st, the market dropped over 100 points. And heading into Friday, there was further continuation. So hopefully we'll see momentum pick up even more. And oil and Oxy, pulls back even further. Speaking of oil, so if I open this up right now, oil as of Friday's close is right here. So it's at it closed at $74.13. When I did the review, oil was quoted at $78.38. So oil has pulled back, attributing to this drop in Oxy's stock price. So again, a lot of things are factoring into this position or overall market. So with all things said, switching over to the trade tab, right here under the option chain, there's a flag position pegged to the September 20th expiration date. And down here are the details. I picked up 3 contracts on July 22nd, and my entry price is quoted at $1.29. And as of Friday's closing price, because Oxy's stock price is dropping, the option premium is going up. So it closed at $3.60. And the overall P&L, or the profit and loss side of this ledger, is reflecting a positive balance of $690 as of Friday's close. So again, hopefully we'll see a further continuation and pullback ongoing. So just to clarify on the valuation on these option contracts, my entry price is at $1.29, right? Now, right here under the option chain, as well as in the description of this option contract, 100 represents the number of shares each option contract is holding. So I need to multiply this by 100, which means one option contract in my trade is actually valued at $129, not $1.29. And I picked up 3 of these contracts, not including commission. I'm risking $387 over the next remaining 47 days in the life of this trade, or until these options expire worthless on September 20th. So far so good. This is the net profit. And so I will continue monitoring this for a further continuation to the downside. So for the purpose of time, I'll pause it again and I'll give it a few days because there's over a month remaining, and I'll do another status check. Today's Friday, September 6th, and just another status check on the Oxy trade. As of the time of this recording, the stock is quoted at $51.89. And since trading started this morning, the stock is down an additional $1.84 per share. So this is where the candlestick is for today. And this is where I entered back on July 22nd. So price is trending, as I was anticipating, to the downside, and has blown past my $60 strike price. And switching over to the trade tab, the position is now up $2,100. The contracts are down to 14 days remaining in the life of this contract, which will be expiring on September 20th. And the option premium is now quoted at $830 per share or per contract. And So since the August 4th update, this trade is up an additional $1,400. And of note, looking at oil right here, MCL, its spot price is $67.80. It's down an additional $1.38. So since the August 4th update, oil has lost a little over almost $7 in value. So that is, I believe, the attributing factor, as well as, I don't know about the dollar, but the dollar index, DXY, is back up over 101 points. So, so with 14 days remaining, I don't know if I'm going to hold it onto this trade that much longer. If anything, I'll probably close this position out Monday. There's other trades I want to participate in as well, and I don't want to get too greedy on this OXY trade, considering that I think there's going to be a further pullback. I think OXY may even touch 47 eventually, but I don't think I'm going to hold on to this for the remaining 14 days. I think $2,000 is enough. Again, I don't want to get too greedy. So that is the current status of this position. I'll pause it here, and I'll pick it up Monday when I do close this position out. So, want to follow? So just a quick update. It's been literally a few minutes since the status check. So now this is the chart layout on my OXY option contracts. So right here by the ticker, this is involving OXY. That's the ticker symbol for Occidental. This has the September 20th expiration date with the $60 strike price, and the contracts are on the put side. So again, this is the option contract to my trade. So what I'm going to do is, while I'm here and thinking about closing this position out Monday, I think I'll just place an order in today just in case it does get filled here. So right here in the top center, this says net position +3. So these are the 3 contracts I'm holding. So I'm going to see if I could close this out at $8.30 back to the $2,100 take profit. So there's my order. Oh, I just got filled at $8.30 for $2,100. So yeah, man, I was hoping to hold on to this, but now the position is flat. So net position right here is 0. So I sold this out at $8.30. So just to clarify, it was $8.30. The multiplier is 100 for the 100 shares each option contract. So one option contract is $830, and I sold 3 of these contracts. So my net or gross profit is $2,490. What I'll do is I'll provide a breakdown, excluding the cost of getting into the trade, as well as the capital required to get into the trade as well. So I'll provide a breakdown of that. Wow. What I'm going to do is I'm going to look for another setup. As I mentioned, there are other trades I wanted to get into. So until the next trade setup, I'll see you.